What we feel great about is while most of our ETFs are distributed through the wirehouses, so Morgan Stanley, UBS, Bank of America, Merrill Lynch, Wells Fargo, not one of them has put us on its platform. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops. And of course, that's Ophelia's 21 shares bailiwick. And they've, the great thing for us, and one of the reasons we wanted to partner with them is they have been battle testing the infrastructure and ops for.
To the casual observer, the buzz surrounding spot Bitcoin ETFs seems to have waned lately. Reports of groundbreaking achievements by BlackRock's IBIT and other spot Bitcoin ETFs have dwindled, coinciding with volatile price swings in the underlying crypto asset over the past week. However, industry experts are adamant that this is just the beginning. They anticipate a surge of interest from the new wave of investors who have injected billions of dollars into Bitcoin ETFs. Cathie Wood, founder and CEO of ARK Invest, anticipates a pivotal moment when major wirehouses like Merrill Lynch, Morgan Stanley, and Wells Fargo will offer spot Bitcoin ETFs, signaling a significant shift in the market. Matt Hogan, CEO of Bitwise, echoes this sentiment, foreseeing a substantial uptick in institutional demand once these wirehouses join the fray. Both Cathie and Matt have reiterated their predictions of an imminent explosion in institutional interest, likening it to a seismic shift in price discovery. In recent interviews, they have discussed the trajectory of institutional demand, Cathie's bold Bitcoin price prediction, and the likelihood of an Ethereum ETF approval by 2024's end. Stay tuned for insights from these industry leaders as they navigate the evolving landscape of spot Bitcoin ETFs and the influx of multi-trillion-dollar investors. Watch the full video for a comprehensive understanding of their perspectives and updates on the top spot Bitcoin ETFs.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Wirehouses, when they learned that 11 of us were going after this market, the first thing they have been doing due diligence, but they're not going to do due diligence on all 11. And they know not all 11 will make it, that they're probably, Ophelia, I don't know what you say, but, I say 3 or 4 make it. I guess I have to say
3
because of
3 to 5.
It's interesting. Galaxy had its conference call yesterday, and according to Galaxy, Invesco is waiting for wealth managers to put crypto on their platforms to approve. And maybe Invesco is very good in that space. So each one has a strength. Now, what we feel great about is while most of our ETFs are distributed through the wirehouses, so Morgan Stanley, UBS, Bank of America, Merrill Lynch, Wells Fargo, not one of them has put us on its platform. And why is this? They wanted to see who the survivors were going to be. They do not want to put their clients' money into a fund that will ultimately shut down. So I think that is becoming clear, although you will have each one of the bottom 6 or 7 saying, no, you have to give us until this happens. In the case of Invesco, I guess it's the wealth managers. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops. And of course, that's Ophelia's 21 shares bailiwick. And they've, the great thing for us, and one of the reasons we wanted to partner with them is they have been battle testing the infrastructure and ops for the last 5 years over what now is roughly 45, 46 offerings, different funds, right? Through booms, busts, through halvings, through forks, through airdrops. And, those are all events that that traditional asset managers are not, well, they've not been through some of them. So that's the first thing they're looking at. They're really doing in-depth research on this, and I'm sure Ophelia will get into that a bit more. They also need to know that their clients and they are going to be supported by two things: research, and we give our research away, as does 21 Shares. Research, and we're prolific. We're putting something out every week on something in the digital asset space. And they need to know that they, whether they're advisors or other asset allocators, are going to be able to call someone who really understands the space.
Cathie, you called for I think it was 1.5 million Bitcoin.
Base case for 2030 was roughly $650,000. However, what has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions, which was closer to the 5% asset allocation to Bitcoin over time. So we think that probability has gone up. So the probability of the bull case, the 1.5 million, has gone up.
Cathie is confident that the forthcoming surge in institutional demand for Bitcoin ETFs will surpass anything witnessed thus far. This conviction fuels her bullish stance on Bitcoin, envisioning a trajectory that could lead to each coin reaching $1.5 million within 6 years. However, she acknowledges the cautious approach of wirehouses in conducting thorough due diligence on these ETFs. Once this process concludes and clients become familiar with this new asset class, Cathie anticipates the next wave of demand to commence swiftly. Existing offerings of spot Bitcoin ETFs on select platforms further reinforce her belief in the inevitability of this shift. During the Empire interview, Cathie and Ophelia also deliberated on the likelihood of the SEC greenlighting other crypto-based ETFs, particularly Ethereum spot ETFs, by year-end. While Cathie remains skeptical until there's a regulatory shift at the SEC, Ophelia holds a more optimistic view, suggesting higher odds than commonly perceived. Watch additional excerpts from their insightful conversation for further context.
The Bitcoin ETF got approved on the basis of a lawsuit, not because there was a fundamental change of heart at the regulator. So just start with that, right? So this is a direct result of the judiciary challenging a policy of regulation through enforcement. Specifically, there was a lawsuit on this topic. That was it. Now, assuming you look at this as a point in time, you then need to look at what's the basis for that. And it comes down to, typically speaking, like two things. There are two key components. One is market microstructure. So, for example, if you need to have a large exchange of significant size, like the futures market, that is regulated and overseen, something like CME, that is very, very closely correlated to the underlying asset price, so that asset price discoverability is there. Pricing discoverability is there, right? There's a bunch of check boxes on, like, what does the market structure look like and does it actually meet criteria? And those criteria have largely been set by prior rejections of the Bitcoin ETF, but there's some precedent for them. The other thing you need is, in order to list a financial product of any kind, you need to have categorized the underlying asset. Because whether it's a security or a commodity or something new, it needs to fit within rules and regulations around derivatives, right? So whether those are futures or other things, right? And which regulator has oversight on this differs. Now, there are a bunch of lawsuits in the United States right now, including one with Coinbase, including one with Binance, specifically about what are these things, right? And we've been reading about that quite a bit, and it's coming down to what features do they have? What does utility look like? How is the ICO run? What is the underlying use case of this asset? Why are people buying it? Where are they buying it? What constitutes an investment contract, etc.? So the issue is that if you don't have clarity on that, it makes it very difficult to then package a product off of it. Now, as you mentioned, Ethereum is pretty clear cut. It's commodity, easy, right? And it's pretty well established in the United States also. So that's a very different conversation. But once you get beyond that, you're talking about some of these other assets, there's not a lot of clarity on that topic within the US framework.
We should also, Ophelia, mention that we are one of the first two in line for the ETH approval. And I think the probability is probably going down. Do you agree with that? Because one of the telltale signs for Bitcoin that something was going to happen with the spot Bitcoin ETF was the fact that we were communicating with the SEC. And unless Ophelia knows something I don't know, I just think that the SEC is still biding its time, maybe studying the issues from what we can tell.
I think the one thing that gives me some hope here, and I think I'm less bearish on this than others, is that there's not a lot of differences between these filings for Ethereum and the filings for Bitcoin. They're the same structure, the same custodians, the same disclosures. It's very internally consistent. That means there's less to look at, right? Yeah. And there's less to look at given that these were only done a couple months ago. Mm-hmm. So there's also that, right? If these had been done 20 years ago, that would be a different discussion and you might want to revisit it. But given how fresh most of the documentation is, that's the one thing I think that puts me at a, let's say, more optimistic than it seems like most.
Please share your thoughts on Cathie and Ophelia's interview in the comments section below, as promised earlier. Additionally, Matt Hugan, the CEO of Bitwise, a crypto asset manager and ETF issuer, anticipates another significant surge in institutional demand for spot Bitcoin ETFs. In his latest weekly memo to investment professionals, Matt encourages investors to focus on the long-term outlook despite Bitcoin's recent volatile price movements. He believes that Bitcoin's short-term holding pattern will shift after the pending ETF approvals on national account platforms like Morgan Stanley and Wells Fargo, possibly within the coming weeks. Matt emphasizes Bitcoin's potential for long-term growth, citing its nearly 300% increase over the past 15 months and strong indications of continued bullish momentum. He highlights the massive influx of new investors through spot Bitcoin ETFs, estimating that they control over $100 trillion in assets. The launch of spot Bitcoin ETFs in January marked a significant milestone, opening up the crypto market to investment professionals on a global scale. Matt envisions this trend accelerating in the coming years, with potentially exponential growth in Bitcoin investments from wealth managers. He invites readers to consider the implications of such massive inflows for Bitcoin and the broader digital assets industry. Do you agree with Matt's estimates? How significant do you believe this influx of capital will be for Bitcoin and the digital assets market as a whole? Please share your comments and observations below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.